Good evening. Thanks for joining us. The top stories today. A record heat wave in California is straining the power grid. Now California's governor is asking people to conserve energy. We talked to Daniel Turner at Power the Future to see how they can avoid future outages. The S&P 500 just closed at a record high. We talked with Lance Roberts at Real Investment Advice to see why we're still seeing a rally. Governments around the world are taking massive measures to save their economies, but are they creating good debt or bad debt? We discussed this with Daniel Lacalle at Richest. And Home Depot reports far better second quarter sales than expected. It's all thanks to people stuck inside making home improvements. The S&P 500 closed at a record high on Tuesday, fully erasing its pandemic losses. It's up about 55% since its March lows. The Nasdaq also hit a record. Home Depot and Walmart both dipped despite strong earnings. They kept the Dow Jones down. Amazon rose about 4% after announcing it's adding thousands of jobs across the country. And Kohl's lost nearly 15% after signaling a slow start to the third quarter. Also, the US dollar index fell to its lowest in more than 2 years. The Dow fell 67 points or 0.24%. The S&P 500 gained 8 points or 0.23%. The Nasdaq added 81 points or 0.73%. And I caught up with Lance Roberts, Chief Investment Strategist at Real Investment Advice for today's markets. Lance, great to see you as always.
Glad to be here as always. Thank you.
So Lance, despite the fact that New York is still a ghost town, even myself and my wife, sometimes we have a whole train carriage to ourselves coming and going from work. But down on Wall Street, we have the S&P 500 shooting for all-time highs, not just highs this year, all-time highs. Now, I know that stocks are forward-looking, but you've looked at even the revised estimates. A lot of companies have revised their future earnings estimates up. You've taken a look. You think even those estimates aren't so hot, right?
Well, if you take a look at the number of companies that actually gave guidance, right? So we're through the S&P 500 earnings season so far. About 90% of companies have reported earnings. Out of 500, only 10%, 45 companies, actually gave a guidance towards the next couple of quarters. Most companies are still withholding guidance. So most of the analysts now are ratcheting up earnings for the S&P 500 going into the end of this year and into next year that really have no basis in reality considering where we are currently in the cycle.
And we hear still a lot of people talking about how they feel that this market is invincible. They have the Federal Reserve behind the market. We've spoken a little bit about this before. What are your thoughts on it now, a few months later?
It's exactly the same. Look, markets are driven by two things. One is sentiment and ultimately fundamentals. When you're in the midst of a cycle like we are in now, so we've had this recovery from the bottoms. It's been a very explosive rally from the March 23rd lows. You know, I know we have to go back several months to remember that we had a correction in March of 35%. But we've had this big rally. We're back to all-time highs, and that is all psychology. The entire advance has been an expansion of valuations. In other words, we're paying more for things we're getting less of. Good example, talking about earnings here, is that earnings for 2020 and 2021 are about $20 to $30 lower than they were the last time we were at all-time highs back in February. So we're paying more for companies and getting less under this idea that we're going to continue to advance this rally and continue to move forward. But see, that's the psychological part of the rally. That's the sentiment, that's the exuberance, that's everybody getting caught up into the rally. And for portfolio managers like myself, we have to be allocated because I have to make money for clients. I have to make money for our family offices, et cetera. So we have to chase the market as well. But understand that long term, valuations matter. And as Warren Buffett once said, price is what you pay, value is what you get. And we're currently very extended in this cycle and paying absurd valuations for companies.
And we see at the moment with rates so low, are you finding it hard to find yield out there?
No, not really. We're actually doing some digging right now in some value sectors of the market, picking up 7 and 8% yields on companies that are out there. It's a bit tougher to find yield in the fixed income side of the market because rates are so suppressed. But the issue for people investing, most importantly, is don't worry so much about the yield that you're getting out of the portfolio. Make sure that you're protecting the capital first. Make sure that you're investing properly. The yield is a secondary function of the portfolio to generate income over time. So, there is opportunities to create yield. There are places to find yield in this market with a fairly safe basis, but be selective about where you put capital because this market does have a lot of risk in it.
Always prudent. Lance, I appreciate the time. Thanks so much.
My pleasure as always. See you.
Now, thanks to the recent market rallies, Elon Musk is now the world's fourth richest person. Musk's net worth increased nearly $8 billion on Monday after his Tesla shares surged by 11% and closed at a record high. Musk's $85 billion fortune puts him within $15 billion of Mark Zuckerberg. Jeff Bezos, the world's richest man, is worth $188 billion. Musk still has a while to get there. Tesla's rally is Elon Musk's latest triumph, especially since it was just 2 years ago that the SEC sued him, forcing him to resign as chairman. Tesla shares are up about 340% this year, not bad. Musk's SpaceX business is also expected to add to his fortune. It's close to finalizing a $2 billion in new funding. And the former head of Europe's central bank, Mario Draghi, says only good debt can save the Eurozone. Good debt gives a positive return on investment, helping a region to grow. But the problem with Europe is governments decide where these huge sums of money get allocated. This means many of the investments are chosen for political reasons, not economic reasons. It's different here in the US, where professional money managers decide where the funds should go and use return on investment as their guiding principle. We'll discuss this with Daniel Lacalle, chief economist at Richest and the author of Escape from the Central Bank Trap. Daniel, great to see you as always. Thanks for coming on.
Thank you very much. Likewise.
So Daniel, we have Mario Draghi. Are we getting, or is Europe seeing the type of debt that he is looking for?
It is very difficult. Let us explain the difference between bad debt and good debt. Good debt is when companies or governments use leverage to invest in the real economy, to generate real economic return, the debt that is repaid and that generates the virtuous cycle of credit and growth. That is good debt. What is bad debt? Bad debt is all of that that is used for governments, particularly to finance current spending, finance entitlements, finance as well projects that are not going to generate higher growth or jobs, and that ends up being a drag on the economy. Unfortunately, although Mario Draghi is trying to incentivize governments to invest wisely, the reality is that when you give enormous leverage opportunities to governments and huge credit growth, it tends to be directed towards malinvestment, white elephants, current spending, and those spending programs that go fundamentally to entitlements and non-economic return projects.
And then how about here in the United States? Are we seeing the correct type of spending at the moment, would you say?
I think that there's a huge difference between the programs that are used in the European Union versus the United States. And the main reason is that it's not directed from government. It is not something that goes top down. These are mostly programs that are sent bottom up, and the United States has a much more diversified, open and flexible credit market that allows the economy to at least send the majority of these stimulus into the projects that actually make sense from an economic perspective. The problem in the Eurozone is that it will be directed and decided fundamentally by governments that are using this increasing debt to increase what is an already bloated level of government spending, that are looking to put the vast majority of the funds into entitlement programs. And what that does, as we've seen in Japan, for example, for so many years, is that it slows down the economy. It makes that debt is a bigger burden on the economy, and it makes the growth be less productive, slower, and job growth worse.
Edges us that bit closer to the socialist state as well. Daniel, I appreciate your time. Thank you for coming on.
Thank you very much. Always a pleasure.
Extra unemployment benefits from President Trump's executive order should be rolling out soon. FEMA puts the approximate start date at August 29th, but it varies by state and whether applications are complete.
The Federal Emergency Management Agency, or FEMA, says states are expected to start rolling out the weekly $300 unemployment benefits by the end of this month. President Trump approved the benefits in an executive order earlier this month. It provides $300 in extra federal funding and an extra $100 in state funding if states choose to opt in. FEMA is distributing the money to states. The agency said it awarded the first 4 grants last Friday, and the approval time depends on whether their applications are complete. The agency cited Department of Labor figures, saying the benefits would start rolling 3 weeks after the order was signed. That sets the average start date at August 29th. FEMA has $44 billion in the fund, which is also used for natural disasters. The agency says it will give out an initial 3 weeks of funding. After that, payments will be made on a weekly basis. On Sunday, White House Chief of Staff Mark Meadows told CNN the president would be willing to sign a limited stimulus deal, one with funding for the Postal Service along with $1,200 stimulus payments, unemployment benefits, and an extension of the Small Business Loan Program.
California's power grid operator says it will not go ahead with planned outages. Its power supply is maxed out during a record heat wave, but asking residents to conserve energy seems to have worked, for now at least. Governor Gavin Newsom called last week's power outages unacceptable and vowed it wouldn't happen again. He also said it's time to sober up on the limitations of solar energy. Daniel Turner, founder and chief executive director of Power the Future, warned about this problem as early as 2017. I spoke with him earlier. Daniel, great to see you. Thanks for taking the time.
Thank you for having me on.
Daniel, of course, our hearts go out to all the Californians who are really suffering during the incredibly extreme weather. What are some of the real steps that Governor Newsom can take to help alleviate the problem?
Well, he can reverse a lot of these policies which are pushing a green agenda. I have nothing against the green technology, wind power, solar panel, et cetera. But the problem is that the physics is not there, right? Fossil fuels, for whatever their drawbacks may be, they have a tremendous amount of potential energy. And so they are able to produce the megawatts necessary to sustain large cities, to sustain the livelihood we know in America. The green technology is not close to that. And so as they close down power plants that run on fossil fuels and nuclear technology, and they switch to this green energy, they are not creating enough power for the state. And people are going to suffer as a consequence.
And is this a problem that you saw coming, or is this something that it was kind of unpredictable?
No, this is totally predictable. But unfortunately, issues like energy, especially when you get into conversations of climate change or saving the planet, et cetera, they take on a political patina. And the electric grid in America is not politics. It is physics, right? And the physics of this do not lie. So we could have predicted years ago where population growth would be, where economic growth would be, and how much energy a state like California would need. When you couple that with pushing these progressive green agendas that reduce our amount of kilowatt production, this is an inevitable consequence. Not only is it predictable, or was it predictable, but it is completely reversible. And the governor is kidding himself if he pretends that he cannot fix this problem, because he can.
And what could he do, say, immediately or in the short term to try and, say, for example, if these extreme weather continued for weeks or months, just as a hypothetically, what could be done in the immediate term?
Turn back on some of the power plants that he has turned off because they run on coal, because they run on natural gas, and they're quote unquote not green. He could buy more electricity from neighboring states. There's a tremendous amount of coal production that comes out of Oregon. There's an awful lot of of hydroelectric that comes out of states east of California, et cetera. So there are things he can do, but the first thing he needs to do is he needs to, in his state, within the borders of California, turn back on those electric power plants that run on coal, that run on electricity. He may hate it. He may say it's not politically popular, it's not green, et cetera. But there is nothing worse than in an electric storm, in a heat wave, or in a crisis when you do not have power. We're talking about ventilators, we're talking about oxygen, respirators, power, electricity. It is truly the lifeblood of the country, of his state, and he is playing political games with it.
Yeah, I could see from his press conference yesterday, he seems worried. He does seem stressed, so I hope he can figure out a solution for it. Daniel, I appreciate you taking the time. Thanks so much.
Thank you.
And Americans stuck at home have turned to home improvement projects in droves. It's good news for stores like Home Depot. Its sales are up 23% in the second quarter.
Home Depot sales surged to $38 billion in the 3 months ending August 2nd, the company's fiscal quarter. It beat analysts' expectations by over $4 billion. The retailer booked over 500 million customer transactions during the quarter. That's up over 12% from last year. The average size of individual sales saw a 10% increase, and sales per square foot, a common revenue measure used by retailers, increased over 23%. At the height of the lockdowns, Home Depot shares plummeted by around 38% from mid-February to mid-March. Home Depot stocks rebounded off those lows. It's now up 32% year-to-date. News of a hike in home improvement activity comes as U.S. homebuilder confidence rose for a third straight month in August to match its highest level ever, as record low interest rates spur buyer traffic. In another sign that the U.S. housing market is a rare bright spot in the economic crisis, new residential housing permits surged by nearly 19% month over month in July, while new home construction soared nearly 23% in the same period.
And still to come. Countries in Southeast Asia face China's growing influence in the region. A new book details how they're responding to the challenge. And the U.S. works with Colombia to move supply chains back to the Americas. Find out more after the break.
When you look at TV networks in America, a soundbite and bite-it-out culture prevails on news and commentary programs. As a Canadian, I'm fascinated with America, and I wanted to offer American thought leaders an opportunity to share their thoughts in a deep dive format where we can explore their ideas together. And so American Thought Leaders was born. The world's most brilliant thinkers believed that open discourse was the key to greatness. However, all around the world, we see that discourse is being stifled and political agendas have subverted media. The Epoch Times launched its Global Thought Leaders program to bring back this great tradition of free thought. As the host of American Thought Leaders, every week I interview some of the most intriguing minds on the most pressing issues of our time. Be sure to check out our new episodes every week.
We are being censored. America's news outlets no longer provide the truth. 90% of news outlets in the United States are controlled by 6 corporations. They're not out to tell you the truth of what's happening. They're out to tell you the picture of the world that they represent. The mission of the Epoch Times is to chase the truth, to ground all statements in facts, and prevent people from being misled. The Epoch Times is independent. We're not controlled by any special interests, and we never will be. The Epoch Times is a non-partisan media. That means we don't stand for any political party. This is a battle between truth and deceit, a battle between forces that would ensnare this country in ignorance, and between a media that wants to present you with the truth. Subscribe today and join the Americans who are seeking truth and tradition. We'd love to have you on board.
Southeast Asian countries are growing more concerned about China's influence in the region. A new book talks about how the region is responding to what it calls the China challenge. NTD's Phil Zhou reports.
China's growing influence in Southeast Asia has caused mixed feelings among its smaller neighbors. Southeast Asia expert Murray Hebert recently published a book that explores how countries in the region have been impacted. It's called Under Beijing's Shadow: Southeast Asia's China Challenge. Murray says there's a lot of anxiety in Southeast Asian countries because of the rising US-China tensions, and that the region is concerned about a decoupling between the two nations.
Concern about whether this will result in a bifurcation of the global supply chain, of which many of the more developed economies in Southeast Asia are key parts of. And they're also worried about the bifurcation of technology.
When speaking about China's infrastructure project, the Belt and Road Initiative in Southeast Asia, Murray says China is struggling.
It's really a struggle for China. Some countries are just holding them off at arm's length. Others keep negotiating for years. These projects have problems getting land. They have trouble getting local permits. There are a lot of struggles.
He says companies are considering moving businesses to Thailand, Malaysia, and Vietnam because of supply disruptions in China. Murray added that the U.S. recently established the International Development Finance Corporation to promote private investments as an alternative to Chinese state-funded investments. He says the U.S. program is slowly getting started, but that it's really important for Southeast Asian countries to get alternate funding instead of depending on China so much. On a recent book review, U.S. Senator Cory Gardner wrote, quote, "The next century will be defined by geopolitical competition in Asia and answering the China challenge." He says Southeast Asia is a region that will be critical to U.S. national and economic security. Phil Zhou, NTD News, New York.
And the U.S. and Colombia are working together to bring $5 billion in private funds to rural areas there. The move is part of a plan aimed at moving supply chains out of China and back to the Americas.
The United States and Colombia agreed to work together to bring new investment to rural areas of the South American country. U.S. National Security Advisor Robert O'Brien said the investment initiative will harness up to $5 billion in private funds for rural areas over 3 years.
This initiative will focus on key elements of the 21st century growth in Colombia: the rule of law, security, infrastructure, rural development, and democracy.
It forms part of the U.S.'s larger Western Hemisphere strategy unveiled Monday. The focus is on security, economic growth, and countering China's influence in the region. It aims to encourage U.S. companies to move manufacturing facilities and supply chains out of China and back to the Americas, and also works to maintain pressure on rulers in Venezuela, Cuba, and Nicaragua.
And still to come, Chinese authorities investigate claims that Australian wine is being dumped into the Chinese market, squashing competition. Find out what Australia's trade minister has to say about it after the break.
大提琴不仅仅是一件乐器，它是有生命、有感情的，需要我们精心的照顾。往往我们一个小小的动作，可能都会对人情绪产生微妙的影响。天音的品牌是福星，我们对于传统的理念很荣幸被神韵艺术团选为指定供应商。时间是酿造音色的不可替代的陪伴。我跟大提琴已经有60多年的友情了，每一把琴都有它自己的个性，熟悉它，才能真正 发挥它的潜力。所以，我希望给你的每一把琴，都是首先我所信任的。
California officials have opened an investigation into the former investment chief for the nation's largest pension fund. He's accused of financial conflicts of interest and falsifying documents.
California's Fair Political Practices Commission says it's investigating complaints regarding the former chief investment officer of America's largest public pension fund, Calpers. Last week, the commission notified former CIO Ben Meng's attorney that the agency received anonymous complaints based on a news article. It attached a Financial Times article regarding Meng's investments and his disclosure of them, saying it would investigate all allegations. The commission says it hasn't come to any conclusions yet. Ben Meng resigned from his position at Calpers earlier this month, saying he had to focus on his health and family. But just days before he resigned, the Naked Capitalism blog accused Meng of falsifying financial documents and having financial conflicts of interest. Several Calpers board members say they're looking into the circumstances surrounding Meng's resignation, including when the pension fund's chief executive Marcy Frost first learned of Meng's possible conflicts of interest. Earlier this year, Congressman Jim Banks asked California's governor to investigate Meng's misappropriation of pension funds into Chinese companies and his relationship to the Chinese Communist Party.
And Australia is standing by its winemakers as China starts an anti-dumping probe into Australian wine imports. China claims that imported Australian wine is harming China's domestic industry by undercutting prices.
The market value of Australia's biggest winemaker, Treasury Wine Estates, took a 20% hit upon the announcement of China's anti-dumping probe. China is the top market for Australian wine exports and is also Australia's largest trading partner, with two-way trade worth $170 billion last year. Australia's trade minister says they stand by their winemakers and dismiss China's allegations.
We find these suggestions deeply troubling and quite perplexing. Australian wine is by no means subsidised. It is by no means sold at or below anything other than market rates in the world market.
The investigation by China's Commerce Ministry examines damage to the domestic wine industry from 2015 to 2019. They say domestic wine production has significantly reduced as a result of an influx of Australian wine. The China Alcoholic Drinks Association said Australian wine producers are reducing prices to increase market share. South Australian Wine Group's MD, David Harris, said the export data doesn't support any facts that they are dumping wine. He also said their wine is more expensive than virtually any wine exporting country in the world. The Chinese government recently placed import tariffs on barley from Australia and also warned Chinese not to travel to Australia because of accusations of racism. Counterfeits of Australian premium wines like Penfolds are commonly found in China.
And that's the latest business updates for today. Thanks for tuning in. We'll see you tomorrow.